end of the year, also on account of base effects associated with the fall in oil prices in late 2014. Supported by the expected economic recovery, the impact of the lower euro exchange rate, and the assumption embedded in oil futures markets of somewhat higher oil prices in the years ahead, inflation rates are expected to pick up further during 2016 and 2017. This assessment is also broadly reflected in the June 2015 Eurosystem staff macroeconomic projections for the euro area, which foresee annual HICP inflation at 0.3% in 2015, 1.5% in 2016, and 1.8% in 2017. In comparison with the March 2015 ECB staff macroeconomic projections, the inflation projections have been revised upwards for 2015 and remain unchanged for 2016 and 17. The Governing Council will continue to monitor closely the risks to the outlook for price developments over the medium term. In this context, we will focus in particular on the pass-through of our monetary policy measures, as well as on geopolitical exchange rate and energy price developments. We acknowledge that the staff projections are conditional on the full implementation of all our monetary policy measures in place. We also take into account that the degree of forecast uncertainty tends to increase with the length of the projection horizon. Turning to the monetary analysis, recent data confirm the increase in underlying growth in broad money, M3. The annual growth rate of M3 increased to 5.3% in April, up from 4.6% in March. Annual growth in M3 continues to be supported by its most liquid components, with the narrow monetary aggregate M1 growing at an annual rate of 10.5% in April. Loan dynamics gradually improved further. The annual rate of change of loans to non-financial corporations was minus 0.1% in April after minus 0.2% in March, continuing its gradual recovery from a trough of minus 3.2% in February 2014. Despite these improvements, the dynamics of loans to non-financial corporations remain subdued. They continued to reflect the lagged relationship with the business cycle, credit risk, credit supply factors, and the ongoing adjustment of financial and non-financial sector balance sheets. The annual growth rate of loans to households increased further to 1.3% in April 2015 after 1.1% in March. The monetary policy measures we have put in place will support further improvements both in borrowing costs for firms and households and in credit flows across the euro area. To sum up, a cross-check of the outcome of the economic analysis with the signals coming from the monetary analysis confirms the need to maintain a steady monetary policy course, firmly implementing the Governing Council monetary policy decisions. The full implementation of all our monetary policy measures will provide the necessary support to the economic recovery in the euro area and lead to a sustained return of inflation rates towards levels below but close to 2% in the medium term. Monetary policy is focused on maintaining price stability over the medium term, and its accommodative stance contributes to supporting economic activity. However, in order to reap the full benefits from our monetary policy measures, other policy areas must contribute decisively. Given continued high structural unemployment and low potential output growth in the euro area, the ongoing cyclical recovery should be supported by effective structural policies. In particular, in order to increase investment, boost job creation, and raise productivity, both the implementation of product and labor market reforms and actions to improve the business environment for firms need to gain momentum in several countries. A swift and effective implementation of these reforms in an environment of accommodative monetary policy will not only lead to higher sustainable economic growth in the euro area, but will also raise expectations of permanently higher incomes. Therefore, it will encourage both households to expand consumption and firms to increase investment today, thus reinforcing the current cyclical economic recovery. As concerns fiscal developments, reflecting mainly the cyclical recovery and the low level of interest rates, the aggregate euro area general government deficit ratio is projected to decline gradually from 2.1% of GDP this year to 1.5% in 2017. The general government debt ratio is projected to decline gradually from 91.5% of GDP this year to 88.4% in 2017. Fiscal policies should support the economic recovery while remaining in compliance with the Stability and Growth Pact. Full and consistent implementation of the pact is key for confidence in our fiscal framework. We are now at your disposal for questions.
Claire Jones. Claire Jones, Financial Times. I was wondering if it would be possible for you to discuss the package agreed in Berlin on Monday night between yourself and the other Greek creditors, specifically how the ECB would react if Prime Minister Tsipras did not accept the package that's now in the process of being tabled. For my second question, in light of the delay in the publication of the remarks by Benoit Cœuré last month, would it be possible for you to comment on the pros and cons of private meetings between senior ECB officials and market participants? Thanks.
Thank you. Well, the first question, the answer is no, because basically negotiations, and this, by the way, holds for also for all the other possible questions on this issue, negotiations are proceeding at this point in time, and so there is no point in me commenting on different aspects of these negotiations and different proposals. Both the Greek government and the institutions have now sets of proposals that they are confronting with each other. But let me say that the one general statement, the Governing Council of the ECB wants Greece to stay in the euro, but there should be a strong agreement. And a strong agreement is one that produces growth, that has social fairness, but that is also fiscally sustainable and addresses the remaining sources or factors of financial instability in the financial sector. So this would be the component of a strong agreement. So that's what I want to say about that. On the other point, two considerations. The first is that we are certainly aware of the prerequisite and the rules that are contained in the code of ethics, the ethical code that governs the executive board members' appearances in different sites and on different occasions. They basically amount to saying that we should avoid any situation of conflict of interest, and we should not divulge public information. What happened on that occasion was basically a mistake. The text of the speech was meant to go live immediately before the speech would take place, just before, and instead went live the morning after. So this is leading us now to review our rules, to revisit our rules, making them more explicit. That is and we'll shortly come out with a new set of rules for as far as speaking engagements are concerned.
John O'Donnell?
You mentioned the issue of Greek debt sustainability, or alluded to it, and the importance of that. Is it perhaps appropriate that the ambition in relation to the primary surplus targets takes into account the recent downward developments in the Greek economy? And secondly, under what circumstances might the ECB be prepared to extend the limit on T-bills acceptance as collateral for emergency liquidity?
Well, on the second question, you know what the condition should be, that there should be a credible perspective for a successful conclusion of the current review.